This is The Banker's Corner, a McGuireWoods series exploring investment trends, solutions, and business issues relevant in today's private equity and finance industry. Tune in with McGuireWoods partner Geoff Cockrell as he and specialists share real-world insight to help enhance your knowledge.
This is Geoff Cockrell from McGuireWoods. Welcome to another episode of our Corner series where we bring together deal makers and professionals in the intersection of healthcare and private equity, talking about trends and deeper sector dives. Thrilled to be joined today by my good friend Mikel Parker at AMB Advisors, one of the leading healthcare investment banks that focuses on middle market transactions and healthcare provider services, healthcare IT, and other kind of related fields. Mikel, maybe give a brief introduction of yourself and AMB, and then we'll jump right into it.
Yeah, sure. Mikel Parker again. I head up the healthcare investment banking here at AMB. I am based in Atlanta, and the rest of our team is in Charleston, South Carolina, on the investment banking side. Been in the let's say call it the investment banking, financial services ops side for approaching a little bit north over 20 years. And nice to be here today. Thanks for having me, Geoff.
Thanks, Mikel. It's one place we could start is kind of to break it down into some more specifics. What are some sectors that you're spending a lot of time on, and then we'll delve into one of them.
Yeah, so fair question. So we broadly, our firm focuses on healthcare services, healthcare IT, and also pharma services. Right now, we're spending a lot of time in that healthcare services, healthcare IT area. We're seeing a lot of activity across urgent care, home health, hospice, doing some stuff in the skilled nursing space, also your revenue cycle area, and then also getting into some activities in the payer services side. So, but broadly, I'd say healthcare services, healthcare IT, and pharma services, and we'll focus on both sell side and buy side transactions for clients, and then also capital raising.
Let's focus on healthcare IT. You mentioned a couple, but maybe pulling back a little bit, how would you segment the healthcare IT market? What are the big categories that you would put things into?
Yeah, fair question. So on the healthcare IT front, they would look at it in a few ways. One would be more of your revenue cycle management space. So, things across that sector in that area. And so we are doing something, and we've got something actually live in market now in that rev cycle HIM coding area is number one. But then also thinking about patient engagement and those tools, communication tools in the healthcare IT area. And then I'd say, third would be within healthcare IT, again, broadly, and we can even go further, but also in your, let's call it your services side around monitoring, things such as remote patient monitoring, complex care management in those fronts, and really what you'll see going into and delving into the at-home space and a lot of monitoring taking place there.
What size do you usually encounter these companies? They can all obviously start as a earlier stage kind of technology, build up into a cash flow business. When are you usually encountering them?
Yes, we're in typically we will, and I'll talk more on enterprise value wise side. Our enterprise values will typically range and will average around the $150 million plus area. We are in, I'd say we will see things perhaps that can go as low as, call it 20 million, 30 million, but typically north of $50 million plus in that range. So we're not necessarily getting into the early stage things that you may see in the healthcare IT space. There's a lot of folks in that, say, telehealth area as one area, or maybe some folks doing some stuff on the AI side that may be younger stage companies. We will, we have a lot of those opportunities, and companies come our way. We do try to find homes for them if it's something that it's something we're not going to work on ourselves or will assist with, but we do try to find paths and provide good advice on where folks may find the solutions that they're looking for, even if it's something we don't work on directly in that younger stage space.
On the provider services side, you're obviously delving into governmental reimbursement and just a higher order of kind of both risk and familiarity that you have to be an effective investor. And that kind of pushes a number of potential buyers kind of out of that segment. There's obviously a lot of people that pursue provider services, but you have to more know what you're doing. How would you describe kind of the different types of financial buyers in healthcare IT?
Yeah, good question. So you kind of hit it a nail on the head there on that point with your question there as well. So on we do a segment, we can segment our buyer universe on the financial side, financial sponsor side, to your point, those that will take that reimbursement risk and those that will not. It's a pretty clear distinction for a lot of folks. We do see a lot of interest in buy groups that do and are open to taking that reimbursement risk and really stepping into the provider services. Others that would like to still be in that provider services space, but aren't looking for the reimbursement risk. They really are looking at tools and services that are selling into the provider services. So it could be something such as a scheduling tool for as one, or EMR businesses, et cetera, those kind of things as well too, for those that do not want to take on the direct reimbursement risk, and also the associated challenges around recruitment, physician recruitment, employee retention, things of that nature as well too. So we do see a clear distinction in buyers that are in one or the other, but we do see a lot of interest in both though today.
How do you think of pricing on these deals in a traditional framing of multiples of EBITDA? What's the range that you see in healthcare IT, and what are some of the drivers that push you up or down in that regard?
Yeah, so healthcare IT with that, really the tech aspect of it, it's really going to depend on, is the company is the target a profitable technology company, or is it really one that's really looking at more of a revenue and top line based business that's going to really be focused even more so, or I'd say more emphasis around ARR or recurring revenue, so to speak. And so, that technology play space, there's a lot of focus, and you'll see a lot higher valuations on companies that are in that recurring revenue space or SaaS based businesses. But then there are others though, and there are others, and I'll get to multiples here in a second too, but there are also others though that may have a blend, I'd say recurring revenue plus transaction based revenue as well too. And so with those, we are seeing a trend with where valuations are trending, I'd say in a higher realm for technology based, I should say SaaS based businesses. We are seeing a trend where companies are looking to try to convert those transaction based services to, recurring based, to a recurring based model. And you'll always have implementation fees and things of that nature is part of your overall, call it offering. But obviously the more you can shift into that recurring based revenue model and really show that track record of renewals, and I'd say increasing top line on the recurring based side and higher margin tied to that as well too, the higher the multiple is going to be. And so your multiples for that space can really trend anywhere from, let's say 3-4 times, 5 times, but in some instances can go up to double digits depending on the value proposition of the business. And this is of revenue. If you are seeing someone that's profitable as well, and not just a growth company that has a negative EBITDA, the story begins to become even much more so powerful from a valuation standpoint, and obviously from, I shouldn't say obvious, but also from a demand standpoint as well too, an investor interest and appetite standpoint. To the extent you can show a high recurring revenue base plus proof of concept on being able to scale at on a profitable basis, the higher you will certainly command from a multiple standpoint.
When you're engaging with a company in healthcare IT, what are some problem areas that you will see in a company, whether it's a kind of heavy concentration of customers, or what are some of the problem areas that potential sellers should be cognizant of?
Yeah, you have a lot of what I'd say the traditional problem areas that you would see in any type of business, regardless of the subsector. So what you just mentioned, that concentration risk, proof of renewal, and traction there. And then, then also collections though too. So one thing I've seen even recently too is even on that, if you want to drill in, if you were to look at one area, let's say remote patient monitoring area, seeing some folks that have had, perhaps issues on the collection side, so to speak. So, billing is there, the contracts are there, but the collection aspects and the true cash flow aspects could potentially have some challenges to it in that area. Let's say, secondly, it is the underlying technology itself. What's the actual platform? Is it truly proprietary in nature, or is it really perhaps some small IP, but really a bolt-on of outside outside technologies to really create the overall offering. Still can be very interesting, but it may not necessarily have as much of a I say call it a halo around it to the extent that the offering is really relying upon third parties to really support the whole capital stack in a large way. Those are some areas for sure. I'd say then, outside of that, it's really your growth play and your growth strategy and what's on the roadmap on the technology front too. Today, it's always good to show what you're doing today and to have that, let's say, solid client base there for your business. But it's really what's on the technology roadmap and how much invested capital is needed to really hit the next stage of your growth on that actual offering side. So those are the key areas. I'd say overall the technology aspect itself, and is it actually, a true proprietary based technology, when you really dig under the covers and you can really see what is there versus not there within the company, that can sometimes turn into a problem. I'd say lastly, actually too, thinking further, it's really the onboarding and retention of your clients, or if it's something that's say focused on patient engagement side, it's retention of the actual patient population or users or members that are actually on that platform. What's the actual ability to retain and engage the actual membership that's tied to your actual offering? Onboarding and retention are really key things. You can have the prettiest tool out there, but if you can't really, once you sell into a certain customer, if you can't get the onboarding or user interaction there, it really does drive down value as well too. So that's actually very important from a KPI standpoint overall.
As you kind of scale up in size, let's call it $150 million transaction value, what's the mix between kind of financial versus strategic buyers in the healthcare IT space?
Good question. Yeah, as you're starting to trend higher, you would be looking at what I'd call more so the quasi-strategic to strategic players. More so as you trend really that 150 million plus, that still is going to be a little bit more lower middle market type value. So you will certainly have some of that I'd say leading even financial sponsors that may not have a platform company in place that would have a high interest to the extent that they have a strong thesis in a certain area. But as you get to the 150 million plus valuation, you are able to attract more so that some of your strategics more so than even just the financial sponsors though. But again, I'd say it's a nice valuation range to step into for a buyer, and I think that still leaves open though a wide market and to cast your net, to cast out there though to both strategics and financials. It's not large enough to where we're talking getting into the $1 billion plus range, where that then starts getting more interesting around who you're talking to. 150 million plus, you're talking a revenue business that still has obviously gotten through proof of concept, is obviously showing good traction, but it's right in the wheelhouse of attracting, I'd say, a pretty equal balance of both strategic and financial.
And going back to the kind of subsectors, are there one or two that you are particularly bullish on, that they're getting a lot more interest than maybe in a couple of years back? I know those things shift around. What are the most bullish right now?
I'd say for this is me talking here, and looking at what's going on in the market in general. I'd say as you continue to have these trends going towards what I'd call it value-based care, or maybe shifts and potential shifts from fee for service. I think that just the backbone of revenue cycle management, I think, is still going to be very important. So, with that, it could be both on the provider side and payer side for technologies in that place. So, on the provider side, some of your, I call it your middle rev cycle type stuff, and really call it improving on the pre-billing, post-discharge pre-billing type work, and the ability to use AI and other insights to improve, what you actually are billing out there. I think is going to be important and continue to be important. To on that same note, on the payer side, it's going to be more of your payment integrity type aspect as well too. Again, better insights, being able to make quick decisions on what is reimbursable, what's not, what's the right rates, duplicate invoices or duplicate claims, all that kind of stuff. I think that area is going to be really important on both the payer and provider side, and I'm pretty bullish on that aspect. And there have been some hot transactions in those spaces on both sides. I do think that there's more to come there. Two would be really around, it's a question around, talk about, monitoring, the monitoring side. It's not necessarily monitoring, I'd say, per se, like what you'll hear in the traditional world of remote patient monitoring, at least. I think it's more of that complex care management or complex care or chronic care management space. I think that is actually going to continue to be will be a very hot space for some time as well, with not only the movement and shift to the at-home area, but also just the simple fact of just scalability here and being able to monitor these high chronicities, high cost members out there, or individuals or patients out there in the healthcare landscape. Being able to manage them at scale when we're at the cusp of really call it a lower labor supply, labor shortage, but still trying to manage your overall cost of care. I think that technology and technologies that can be very effective in monitoring / alerts and trying to even and have insights in preventing or stepping ahead of episodes before they happen. I think those technologies will be very sought after and should be.
Well, Michael, thanks again for participating in this episode. Your insights on this very active sector were super helpful, and thanks again for joining us.
Great. Thank you, Jeff. I appreciate the time. Take care.
Thank you for joining us on this installment of The Banker's Corner. To learn more about today's discussion, please email host Geoff Cockrell at gcockrell@McGuireWoods.com. We look forward to hearing from you. This series was recorded and is being made available by McGuireWoods for informational purposes only. By accessing this series, you acknowledge that McGuireWoods makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this installment. The views, information, or opinions expressed are solely those of the individuals involved and do not necessarily reflect those of McGuireWoods. This series should not be used as a substitute for competent legal advice from a licensed professional attorney in your state and should not be construed as an offer to make or consider any investment or course of action.